Hello, this is DowBoy here. Just wanted to talk you through my spread betting calculator version SE squared. SE squared stands for single entry, single exit. So first of all, when you open up the Excel spreadsheet, this is a Excel 2010 macro enabled spreadsheet. You'll come to this welcome screen here. You'll see there's various links where you can either follow me on Twitter, look at a few photos, etc., or click here and this will be the video tutorial. Okay, so basically let's all straight into it. There's two sheets. You can either choose to buy or sell, short the market or go long the market. So just for this trade example, we will buy, we will go long, and all you do is just click the button. This then introduces you to this calculator here, and as you can see, this is for long entries. So I'll talk you through it. It's a 1, 2, 3, 4-step process. First of all, these fields are optional. All you're going to do is enter in the yellow cells, and it's account information. Now, just say for instance, you were trading FTSE 100 cap, let's say Barclays, you could enter in its epic code as explained on the hover over here of BARC. So you could type in BARC. If you knew the bid offer spread, what the spread was, difference between the bid and the ask, you could enter this. Maybe it's just say 2-point spread, would enter 2. Account size, whatever your account size is. Let's just say for this example, it's a notional £10,000 in your account, and maximum allowed risk per trade. Here you can enter a percentage of risk. So let's just say for this example 1%. Instantly it calculates that your maximum allowable loss will be equivalent to £100. Right, so it instantly goes on to step 2. Step 2, insert trade information, and this is via the set method, stop entry target. So first of all, protecting the downside, would look to enter in the stop loss price, which obviously must be lower than the entry price. So let's just say it's a stop of 200. 200 there. Entry price, let's just say 210 just for this example. Let's just say target price will go at 250 just for that. And instantly you'll see what happens now is a whole range of data appears before your eyes. Okay, let's go through one by one. First of all, points and pound values. So the estimated profit target in monetary amount is £400. Estimated risk, as we know, was £100. So target amount in points is 40. Stop amount in points, or if this was forex, would be pips, is 10. So as you can see, we have a risk reward ratio of 4:1. Now this is the estimated trade price increase, so it's just how much the actual trade increases as a percentage, which is 19.05%. And this is the estimated account equity percentage increase, and again it's estimated as you obviously haven't placed this trade yet, which would increase your account if all goes well by 4%. Spread cost £20. This is because you entered in the 2-point spread here, and that's purely just calculated 2 times the stake, and the stake that you're allowed, maximum stake, is £10 a point. So in order to have this maximum loss, the risk reward ratio, you'll be placing £10 per point. Okay, what we'll do, we'll go over here into the margin area. Now it's a little bit of a grey area. There's so many spread betting firms now that are fighting literally in this lucrative market to get customers, and it's a bit of a minefield, to be honest. There's many different ways in which they're trying to calculate margin so that they appear to be offering the best deal, but unfortunately the downside is it's not that easy nowadays to compare on a like-for-like basis what the best deal is, i.e. on cost margin requirements and actual cost of the overall trade. The two most common ways are either a pound amount or a percentage amount, and just as it says here, usually equity spreads are a fixed percentage, i.e. 5% notional value. Usually non-equity spreads are a margin factor multiplied by your stake. So in other words, for every pound's a point. it might be that you would have a margin requirement of say £30 for every point that you place. At the moment, the position size, and that's just calculated the notional value of the spread bet, i.e. the entry price times the stake. In order to buy this underlying, this would be £2,100. So let's just say, for instance, just hypothetically, there was a £30 margin requirement for every pound a point. If I entered in 30 here, this would mean, because we're at £10 a point, the margin requirement is £300, giving you a leverage of 7 to 1. Just to show you something else, let's just bring this into the frame. Here's another spread betting company. They actually do it another way, through a tiered system. If you're betting quite large amounts, as this example would show, at £2,000 a point in HSBC, £1,500 at the 5% tier 1, then after that the extra £500 goes into a different percentage rate, a 20% tier. So that's another way to do this. There's other companies, especially in Forex, which look more at the actual leverage amount. So in other words, they will charge you or require a different margin amount depending on the amount of leverage, i.e. it could be for a leverage of 100 to 1, you pay a certain amount, but if you were leveraged at 400 to 1, it could be another. So again, big differences, a bit of a grey area, and you'll just have to check and go through with your spread betting broker to see what's applicable. Let's just say we delete that, and let's say we want to do it as a percentage. Let's just say 5%. And then we could see that the margin would be £105 or a 20 to 1. Okay, the whole idea really of this calculator, why I created it, there's nothing too groundbreaking here. Most of this is all relatively common knowledge, but what I did want to try and bring across was targets and what if scenarios. In other words, trying to make the novice trader, anybody that's into spread betting, look more from a future orientated, target driven perspective. In other words, what if we look at a chart, maybe from a TA point of view, and your initial point of view is you come up with a 4 to 1 risk reward. Well, maybe after looking at the chart again, you might think, well, hang on, there's a chance of maybe a 5 to 1 or 6 to 1 risk reward here. And you might want to think, well, what if I could adjust my risk slightly, have a tighter stop or a slightly wider stop, or what if I keep the stop at the same but I increase my target or shorten my target. The premise of this calculator is to bring this all into view once the initial calculation is done. So first of all, I'll move on to 4 here, desired risk reward. Again, at the moment you're at a 4 to 1, and this is just a quick way to say, hey, what if I wanted, say, 5 to 1? So if I enter 5 in here, you can then see, well, the price must reach 260, and this will give you a gain of 23.81%, or in other words, a pound amount of 500. It's a very quick way just to compare different risk reward ratios, and the little warning just sign is just saying, hey, that the estimated risk reward is less than this desired risk reward. If this was the other way around, you'd get a different warning, just to let you know that your desired risk reward is now less than the estimated, and if for some reason you entered in the same, it would just let you know, hey, both are the same. And we can clear this just by pressing this little button there. Okay, right, so let me just move across. What I'm going to do, I'm going to hit this button here, and this is show summary, and what this does, as you'll see, now brings into view, I'll move this sheet across, all the details of the spread betting calculator into just a quick, easy reference point of view. So all the information, what the epic code was, the spread, count size, all the different criterion is here, all listed. But now here's the other part that I wanted to tell you about the stop and target scenarios, and pretty much does what it says on the tin. Here in this section we're altering stops only, over here we're altering targets only. There's also a little sentence here that tells you what's going on for each area. So let's just start here. Now what this says is, well, we're altering stops only. So as it says, tighter stop, but the limit order at 250 and its £400 profit potential value still remains unchanged. Okay, so we're just tightening up the stops, and what actually happens if we're altering the stops, you'll see that the risk reward ratios are changing, the account at risk is changing, and obviously the stop amount in points is changing. So this brings that all into view. And here we're widening the stops, so we're looking at as it says, wider stop order, but the limit order at 250 and its 400 profit potential still remain unchanged. So again, we're now looking at increasing the monetary value, risk reward, etc, etc. Over here we're altering targets, so here we're looking at increasing the target, so we're increasing the profit potential. So it's starting at 254. Excuse me, at the moment we've got a current price target of 250. By the way, these cells here are pretty much just the reflection of these cells here. So we know that currently the target T price is 250. So if we increase the target but the stop order and value still remain unchanged, so we're now saying, what if the target's 254, 58, etc, going all the way up to 290, and we can see how this affects the risk reward ratios, how much percentage gain and account percentage gain, and obviously like I say, a pound amount gain, a monetary value gain. Going the other way, we can reduce the target. Again, stop remains the same, so the risk reward is obviously decreasing, profit is decreasing as well. So this is a handy little calculator in that once you just enter just a few cells, it does bring back a lot of information for you, all in a handy little spreadsheet with quite a few what if scenarios, so that you can maybe analyse, and on hindsight, second thought, maybe you can look to adjust your target and have a bigger risk reward ratio with a higher profit margin. We can also print this off. Obviously a lot of these cells are in black, but there's a print macro here. If I print summary, and what this does, this will bring this little print preview up, and we can print this off, or just purely in white background in black. So that's good. And let's just close that off. This is the long. Obviously we can go short as well, which is exactly the same, pretty much in reverse. We can clear all the data and hide that summary, and that's basically about it. Little disclaimer here going through, telling you a few bits and pieces, also a few credits, people that have helped me with some of the formulas, which I'm extremely grateful for. This spreadsheet wouldn't be here free to all of you if it weren't for people that help on these on this Excel forum. So I'm indebted to a lot of these people here. They're great people, so many thanks. And that's basically it. And what we'll also do, you can just obviously click to close off, and it will just give you a little timer to close the spreadsheet. Thank you very much. I hope you enjoy using this calculator. It's free for anybody to download, and I wish you well in your journey and in your trading. Thank you.